Hey guys, I thought I'd do a high level sort of overview of my semiconductor stocks and sort of just give you a look over them all and sort of a quick word on some of the ones I'm not invested in. So this was sort of a nice chart that I saw, just sort of giving you a bit of a breakdown of all the different companies. So you've got sort of manufacturing side of things, ASML sort of being one of the key manufacturers for the machines that make the chips, and sort of that's a great company from what I can see, but a little bit expensive for me. And then you've got foundries, so the companies that generally sort of make the chips, TSMC and Global Foundries sort of are just foundries, they make other people's chips. Global Foundry sort of being a fairly small player now. It's basically TSMC. And then you have sort of Intel and Samsung who design and fab their own chips. So it's sort of basically those three really, TSMC, Samsung and Intel. And then you have just design companies, so AMD, Nvidia and Qualcomm. All three of these really design their own chips and then use a combination of either TSMC and Samsung. At the moment, none of them really use Intel. Intel are sort of a closed off design and manufacture their own stuff, although they're looking to branch out. And yeah, I kind of think Nvidia and AMD sort of both have the lead in their own respective fields, but the price certainly reflects it. So it's sort of not something that I'm looking to get into. I think these leads can be sort of eroded relatively quickly. Obviously not months, it's years, but you know, if you're looking to hold the stock for years and you sort of pay a premium and then hold for a few years, that sort of catch up can happen, and yeah, the company might grow, but you lose sort of PE multiple because people think the lead isn't going to maintain. And you have Qualcomm, who sort of do most of the non-Apple phone chips. They don't seem sort of particularly bad value, to be honest, but it's just one that I don't own. And then you have the sort of consumer-facing companies, so your Tesla sort of design their own chips and then get them manufactured elsewhere, but they want to build their own eventually. And Apple, who sort of design their own chips for their phones, and as far as I'm aware, they have a completely exclusive deal with TSMC, so that's quite nice. Yeah, and then you have some sort of software companies that support sort of most of these companies. So yeah, first up, I would say Intel, sort of the big obvious one that a lot of people would look to. Sort of been trading fairly steadily down over the last year. Been a little bit sort of up and down, flat over the last sort of 5 years, but I do think they have sort of reasonable sort of couple of catalysts ahead. Just sort of looking at a few stats. So they've come down a little since these stats were measured, because they're at 190 billion market cap. But yeah, with sort of earnings potentially coming down a little with the chip shortage, still looking at a 15 forward PE, which is a little bit high, to be honest, considering what they're doing. But yeah, so that's probably closer to sort of 14. But yeah, 25% net profit, which is pretty good. Keeps the cash rolling in to be reinvesting, and yeah, a reasonable amount of debt, but sort of cash to pay it off. But they're not exactly super cash rich. They're sort of looking to pay a lot less in dividends and sort of buybacks, and sort of looking to expand their sort of facilities and investment, really. The new CEO, Pat Gelsinger, is sort of an engineer by trade, if you like. He's sort of had a big hand in the x86 chips themselves in the beginning, so he's probably the man to lead them forward. And there's an interesting article on Market Watch that I thought just sort of laid out some bullish case for them. So obviously they have the main CPU side. Potentially their new older Lake chips are sort of competitive with AMD. So potentially AMD's lead is sort of being challenged, at least, if not sort of hit hard. I'm sure AMD will have a response to these chips. But yeah, that's looking pretty good. They're also getting into graphics cards. So sort of they've got some laptop graphics cards out, which again, people are saying maybe aren't quite competitive with AMD's and Nvidia's offerings, but it's nice to have. They're also sort of have the couple of wild cards in the Mobileye self-driving vehicle technology. So they've been looking to probably spin this off at some point. There was a talk of sort of 50 billion valuation in that. So for a 196 billion market cap, that's sort of 25% of that, which never would have expected a little while ago. And they're also looking to, sort of with the aid of the US government, spend an awful lot on new fabs and sort of potentially be licensing out, like TSMC, opening up to the rest of the world. And there was news that Nvidia sort of came out and said they would be open to using Intel. I think people sort of saw this as sworn enemies sort of co-opting, which I didn't really see, considering, I mean, Intel have only really just got into graphics cards in a small way, maybe on the sort of business enterprise level, but yeah, I couldn't really sort of see that as all that bad, and sort of cooperation when there's a chip shortage probably would help. So yeah, they could, if they're not, their designs aren't quite up to scratch, they could get into just sort of being a foundry like TSMC and making other people's. So yeah, that's kind of why I'm in Intel. Not sort of tremendous growth, but sort of seems reasonable value, and I'm sort of pretty much in it for Pat Gelsinger, who sort of, he hasn't been there that long, and he needs to, as they say, start turning things around. So the sort of competition is Taiwan Semiconductor, really. So they've been sort of, they were trading fairly flat sort of last year, but have come down a reasonable amount. Not sure if this is sort of related to, well, yeah, timing wise, it looks like it is related to the war, unfortunately. I guess potential people thinking about conflict with Taiwan and China, but we'll see. I'm not really expecting anything great to sort of come out of that, so they're sort of reasonable value, I would say. Sort of forward PEs of 21 for an incredibly growing company, higher profit margin than Intel, sort of 37% net profit, which is extremely good. Cash, all this is in sort of Taiwan currency, so the numbers are very large, but you would sort of divide them back. So they have more cash than, significantly more cash than debt. So that's a very nice position to be in. And just sort of looking at the financials, again, it's sort of large numbers in Taiwan dollars, but yeah, sort of 50% revenue increase in basically the last 2 years, and sort of expected to continue, mainly due to, again, using their pretty much all of their free cash flow to build this sort of thing. So kind of consider this as essentially sort of a moat. Sort of people would look to monopolies and moats and that sort of thing, and you really can't just throw up facilities like this. They're sort of spending, I think, $40 billion just this year on new facilities, and sort of I think they said 100 billion over 3 years, where Intel, even with the help of the government, are sort of I think looking to spend about 40 billion over sort of 3 to 5 years. So just think TSMC has the money to sort of continue their lead, really, as long as they've got the sort of design companies like AMD, especially Apple and Nvidia, sort of all using their stuff, then they should continue. So certainly looking to put more into TSMC as soon as sort of cash from crypto hopefully becomes available, and take a little bit of advantage of this dip, with the sort of known risk that there is a little bit of China-Taiwan risk, but they're looking to sort of build in the US as well. So yeah, fairly happy with them. Samsung, interesting sort of mixed company. Again, this is in sort of rather extreme figures. This is in Korean won. So that's, I think, about 1,200 per dollar. So the numbers are extremely large, but you can sort of look at the stats page or sort of go to the financials and just divide everything by sort of the current rate, sort of 1,230 or whatever it is. But yeah, incredibly sort of low valuations from what I can see at the moment, sort of forward PE of 10. Obviously they're in sort of multiple segments. So you've got the sort of consumer electronics division. They also own 20% of the battery side, Samsung SDI. So this is sort of part of the reason for bullishness. So it's not entirely owned by Samsung Electronics, but 20% of this. And the world's going to need a hell of a lot more of it. And fairly bullish on that. They've also got the sort of consumer electronics side and then the semiconductor side. So, as I say, sort of companies will use them. Sometimes TSMC literally can't supply, and they will use Samsung. I think Nvidia have used quite a lot of Samsung before, so they make their chips. Samsung make their own chips for their phones alongside sort of using Qualcomm. But yeah, they have that side going, and they also do RAM sort of memory chips for sort of them and others. So yeah, quite a diverse business. So quite like Samsung. Extremely healthy balance sheet, as you can see, sort of 472 trillion won, but sort of 366 enterprise value. So just sort of reminds you that they have an insane amount of cash. So 124 trillion compared to 18 trillion in debt. So they have been sort of on the lookout, from what I've seen, to spend some of this cash on acquisitions, but it hasn't sort of come to fruition yet, but we'll see. Only 14% net profit. I would think sort of part of that comes from the consumer electronics sort of low margin business dragging it down a little bit, but overall seems fine. And finally, Himax Technologies. So it's a sort of very small cap that I've been getting into quite a bit, growing the position. So over the last year, it's been all over the place, within a reasonable range. It does have sort of crazy spikes up, being sort of under $2 billion market cap, and sort of on the 5 year, you would think, what is going on there? So it was sort of $2-3 even up to sort of during the pandemic times. But yeah, it's risen up sort of partly due to growth catalysts. So you're looking at autonomous vehicle technology. So Hymex, yes, they are a design-only sort of manufacturer of display chips and interconnects. So they're sort of involved in anything with a display, pretty much. And sort of one of my sort of themes that I'm noticing is cars having a lot more screens. So obviously, older cars, you would have the sort of normally analog speed dials and that sort of thing in front of you, and sort of maybe a very, very small, 2-inch display for sort of the stereo, where now you're sort of getting, in a lot of cases, a digital display for speeds and fuel, electricity, and that sort of thing, and then a gigantic tablet sort of bolted to the dash for your sort of entertainment and sort of various functions, aircon and all that sort of thing. Quite often now a display for the passenger, so that's just entirely new to the sort of modern cars. That's another display. You're then getting heads-up displays. This is sort of a concept picture, but you are getting these in cars now. So Hymex are involved in the sort of heads-up display tech. Not sure whether this is quite a realistic use of display technology over here, but yeah, it's certainly a theme, and it's their sort of largest growing segment at the moment. So obviously they're going to be also involved in any displays to do with phones and tablets, which sort of, again, you've got the sort of emerging market more getting towards phone use. So you've still got a growing market there, even if it is slower in sort of Western economies, but still growing steadily. And you've also got sort of the TV side, which people would maybe think is a little bit slow, but TVs are getting bigger and bigger. It's something to consider, and sort of the OLED and sort of more in the move to 4K, but also 8K TVs. The chips and interconnects are a lot more expensive. So, yeah, they've got growth in sort of the core business, as well as these sort of more modern areas like autonomous vehicles, but then also the sort of VR and augmented reality side of things. So you've got sort of arcades and home use VR setups sort of becoming more prominent. I think this does really work well in a sort of arcade, sort of multiplayer, family experience, sort of friends experience type thing, where sort of the tech is a little bit easier to put in there. Sort of in your house, this sort of thing is not exactly feasible, where they can sort of put this in large warehouse areas. Some of the ones still have cables sort of coming down from the headset, but they're on sort of rails on the ceiling, and it's just easier to sort of run around. You get a much more immersive experience, and yeah, every one of these headsets sort of has display chips that sort of should be a decent growth for Hymax. So yeah, they're doing pretty well stats wise. Probably one of the best. Crazy forward PE of 4.5. It's even a little bit lower than that because they've come down since those stats were sort of published. So you're probably looking at closer to a 4 forward PE, considering sort of all the growth that you can see there with various sectors. I can't see why more analysts aren't getting on this. So 28% net profit. It's not as if they're a low margin business, and also sort of cash positive, $360 million compared to $219 million in debt. So yeah, very bullish on this. I don't want to sort of absolutely pile in because it is sort of a fairly volatile small cap. As I say, sort of just over, well, under 2 years ago, this was $3. So nothing to say it can't go back there if something bad happens. But yeah, I'm certainly bullish. So we'll see. That is sort of pretty much my semiconductor allocation. So yeah, leave your thoughts in comments below, and like and subscribe. See you soon.